morning. Thank you for joining us. Last couple of weeks have been dull and drabby for the market. Do you think we could be in for more of the same, where the month of June, while the setup may look promising on macro front, on technical front, the price action may be flat and no decisive moves?
Good morning, Nikunj. Always a pleasure. So if you look at the move of the markets in the last, say, 1 to 2 months, it has been quite a turnaround from what we were seeing in the first quarter of this year, as also what we saw in the last quarter of last calendar year. Now, it left everybody flummoxed as to why this is happening. And then the fourth quarter results came in. And what we have seen in the fourth quarter results is that by and large, with the exception of maybe one or two sectors, there has been a beat on expectations. And Nifty this year has ended with a 1% kind of upside on earnings over a large base of the previous year. Previous year was, we need to keep in mind, around 24% earnings growth. On that, we saw 1% earnings growth for the year. The other thing we noticed is that in this quarter, the upgrade to downgrade ratio, that became favorable. And this is again a change from the previous 2 quarters. So clearly the markets were anticipating this sort of a result season, which is why the markets rallied as much as they did. And having done that, it is only fair that markets digest this kind of a move. And it becomes somewhat of a consolidating market, a boring market for some time before markets are in place for the next leg of the move. And as a result, it's possible that for this month, as also as we have seen in recent 1 or 2 weeks, the markets become range bound, and that markets digest this move over the last 2-3 months, and thereafter set up for the next move.
Right, okay, that's the take coming in on what the market setup is looking like. But of course, you know, the big news this morning is just ahead of the peace talks which were slated in Istanbul in Turkey. Ukraine has pulled off its longest range drone attack yet, striking deep into Russia and reportedly destroying 40 warplanes across their 4 critical military bases. The codenamed Operation Spider's Web, the year-and-a-half-long mission, hit Russia's nuclear-capable bombers using drones launched from hidden truck sheds. Russia also launched its largest drone swarm of the war, and apparently it was targeted at Kyiv in Ukraine. Meanwhile, a bridge explosion in a border town killed 7 as both sides escalated just ahead of the peace talks. Anshul, you don't think any escalation in Russia-Ukraine now would have any repercussions for the market sentiment overall, globally or India?
Morning, Aisha. You know, we have seen this war break out sometime in the year 22, February. And that was the period where it was a surprise, a negative surprise, of course. But thereafter, I mean, I still recall that around that year, the markets consolidated till the end of that year. And in fact, only in March 23, the market started rallying. I'm talking about the broader markets. And thereafter, we've seen a tremendous rally, particularly in the small caps. We've seen as much as 70-80% upside from the lows of March 23. Now, the surprise factor in this war is by and large in the markets. Everybody understands that this is a war which has been happening for the longest time. And markets move on surprises, much more than whether positive or negative, markets move on surprises. Now, having seen the war go on for nearly 3 years now, and we have seen this escalation of late, but we are also seeing peace moves happening in Istanbul, as you rightly mentioned. And we have a president in the US who's working overtime to ensure that the war comes to an end. So we will have to wait and see. I doubt that this will have an adverse repercussion on the markets. I think the markets are well aware that this is a ongoing situation, and you know, skirmishes here and there don't really move the markets too much. So my guess is markets will take it in their stride.
Anshul bhai, why is there so much of excitement in autos? The industry is not even growing at the GDP growth rate. Forget about nominal GDP. You take out some exceptions like tractors and some companies like Mahindra and Mahindra, the sector, at least the PV sector, is growing at 2-3%. What is the excitement all about in autos?
That's right, Nikun bhai. The sector is growing at 2 or 3%. Of course, we have to bear in mind that there has been a slight sort of beat on expectations in the fourth quarter in autos, and prices have really not gone anywhere in the last say 2-3 years. In fact, the largest passenger vehicle company has seen its stock price consolidate for the better part of the last 3 years and has gone nowhere, while the markets we know have really gone gangbusters in this period. Now, also, it is not just about volumes, it is also about profitability share. What is changing is that the profitability share is moving up because the market, in particularly PVs, is moving from the regular cars to SUVs, etc., which is a higher margin product. And as a result, the markets are slightly enthused by that. Also, in this year, the expectation on commercial vehicles in terms of volumes has been rated up, and the street expects that commercial vehicles will be between 5 and 10% volume growth, which is something the market was not expecting earlier. So combine these two things, it looks like there is some excitement. Also, stocks, as I mentioned, have come down. So there is some excitement in this sector, but clearly this is a more a defensive sector than a huge sort of absolute return sector in our judgment.
I wanted to get your sense in on how this entire piece of the metal tariff hike is going to play out, because I mean, India is not a major exporter of steel and aluminum to the US in any case. So I guess in that sense, mathematically, there is not going to be much of an impact other than, of course, Hindalco because of its US subsidiary Novelis. But sentimentally, do you think metal stocks could take a hit today?
On tariffs, yes, you are right that that could be the case, that just some nervousness because of tariffs. But if you just step back and look at the fundamentals of metals, it does look like metals are setting up for a nice move over the coming few years. We are on a cyclical low, and valuations also are really not stretched on stocks, and demand globally seems to be picking up. Now, if we are going to move, particularly in the US, to a capex cycle where they add to capacities, add to infrastructure, demand for steel in particular and metals in general is going to be quite robust. If China is to move out of its current morass, it has to really give a fillip to economic activity. Again, that will be positive for metals, steel in particular. And then if we come to India and we see what has happened, the anti-dumping tariffs that have been applied in India, those bring Indian companies on the same pedestal as some of the importing companies into the country. And that will again be positive for metal prices as also volumes in general. All of this is setting up for a nice fundamental tailwind for the sector. Steel in particular looks interesting. Copper in general is the favorite of the markets because of the EV trade. So, in our judgment, this is an interesting sector to really look at, and opportunities will come about in the coming few months and quarters.
No doubt in the market, right? The promoter selling, these block deals that have been happening, the rush of IPOs clearly seems to be getting back. Is that some sort of an alarm bell in the market of how the sentiment is out there?
Aisha, again, my experience over the last many years says that selling of equity is much less of an indicator as compared to buying of equity, because there can be multiple reasons to sell. For instance, in the case of Whirlpool, they're bringing down their equity because the parent is in trouble. They have a lot of debt on the balance sheet of the parent and they need to sell. Now, that is not a reason for us to believe that there is something wrong with the India business. That is something that is happening at the parent level, which is why equity is being brought down. But for all the reasons to sell, there can be only one reason to buy. If a promoter is buying, it is clear that he's buying because he sees value in his stock and he thinks that from here, in the next few quarters and years, the stock is going to go up. Hence, I pay much less attention to promoter sales. I pay more attention to promoter purchases. And also on IPOs, the IPO market going up, I think when markets in general do well, a lot of companies want to list, and that trend is again picking up. It was in a lull for the last 6 odd months, but it has come back again. And I think that that's really par for the course. I wouldn't read too much into it, Aisha, at the moment. But if it if the markets become heady and too much of IPO activity picks up, that's when you need to have certain flags in your head as to how much liquidity is being sucked out of the markets.
So that's the time Oren speaking with us this morning.
Pleasure.
Along with that, let's also get you some more trading.
If you like this video, then like, share and subscribe to ET Now.